Hey everyone, and welcome to the weekly update with me, Rich Perry, market analyst at Handtech Markets. Each week I take you through the key events that I believe will be driving your investments in the coming days. Now, certainly this weekend we had Eurozone being impacted significantly by this breakdown of the talks between Greece and its creditors. There was an agreement of sorts, but apparently Tsipras wasn't happy with this agreement, and he's basically now gone to the Greek people and said he's offered them a referendum on whether they would like to sort of abide by these rules stipulated by the creditors or not. So there's no official wording written for the referendum yet, but it certainly looks like that is going to be the case. Now, the impact on Eurozone and across the board has been significant. Eurozone equity markets significantly lower. The euro, for example, sharply lower at the open on Monday. Rebounded though, interestingly, since then, quite a significant rebound, and it's very interesting to see how this one plays out, because you've got across the Eurozone as well the peripheral versus the core Eurozone bond yields. The spread between the two has been sharply higher due to the fact that the Bund yield has been significantly lower, subsequently with German Bunds being bought. And on the other hand, you've got peripheral Eurozone yields such as the Spanish debt being debt yield going significantly higher. So you've got this dichotomy of the two, sending the spread sharply higher. Now that shows significant concern over potential contagion in the Eurozone as well. So watch out for those bond yields, which could give an indication of where the equity markets and also maybe the euro will be going as well in this week. Throughout this week, we've got a whole load of US data as well, which will be driving sentiment. Now, you've got payrolls, you've got the ISM manufacturing, and also average hourly earnings, which are all key to potentially showing where the Fed will, or when the Fed may be looking to hike interest rates. Currently, we're seeing a few hawkish FOMC members coming out and talking about September. I still think September is a little bit early. I think the Fed is a touch more dovish than perhaps people or the markets are potentially factoring in, and also I think that will mean that we just see September off, and then I think we're going to see some rate hikes going on in December potentially. So, how is all this playing out into the Forex markets? Well, Forex markets have had a significant jump around on Monday morning. You've had the euro sharply lower, back below that key pivot at 10.50 that I've been talking about for quite a few weeks now. The interesting point is that it rallied back above it though, and I think that pivot is still intact. Unless you see, I think, a closing basis below that 10.50, I think you're still in with a shout of playing that as a key pivot level on the euro, and it'll be interesting to see if that plays out during this week. This jump that we've seen on the euro today may well turn into a bit of a selling opportunity, certainly if the uncertainty and negative rhetoric continues out of Greece. So we've got also cable, which has had a bit of a slide today. Not too much, not as obviously significant as the euro, but again, it has been a bit of a slide to the downside. And what we have got is a nice band of support around 156.65, which is basically, I think it was Thursday's low, and it's again performing the support of the low on Monday. So if you started to see a close below that low, I think that would be a continuation of that bearish drift that we've seen on cable in the past week or so, and it just continues to unwind some of that huge move that we saw over the past few weeks on cable that saw significant gains. It'll be interesting to see if it does get that close below 56.65, because then I think we'll see a continued just drift back towards maybe 54.50. I'm still looking out for a higher low to be coming through on cable, but I think cable generally will be quite choppy in the coming months. For dollar yen, it's an interesting play again, because 122 figure, I've talked about that many times over the last few weeks. 122 figure, I still think that is going to be around about where we're going to see the next key low on dollar yen. It's come back to 122.10 on Monday morning and bounced off there. So watch out for also the Fibonacci levels of the big 118.86 to 125.85 bull rally. And I think that those Fibonacci levels continue to be tradable. You can still look at those as trading opportunities. Now, indices. A lot of stress on the DAX this morning, early doors. We saw the DAX off almost 5% at the open. It's sort of come back now around about 3% down on the day, but it still is a lot of stress. Interestingly enough, it's still holding on to that key support band around 10,800, and that remains in place. And I think whilst that remains in place, you're not going to get too bearish about the DAX, because that is still a key low that we have as support on that DAX. The S&P 500 has been trading sideways. It's likely to open up down at the open on Monday, but continues to trade above that support band around 2070. So the fact that we're still seeing this hold up quite nicely, you've got earnings season that's coming through in a week or so, so it'll be interesting to see the impact that that will have on the proceedings, but certainly it has been holding up quite well. Not so much necessarily on the FTSE 100. FTSE 100 has broken back below that 6,625 support that we've seen on an intraday basis, and it'll be interesting to see if that happens on a closing basis as well. If that does happen, you certainly wouldn't want to be bullish on the FTSE. For gold, you have had a series of safe haven plays that have been benefiting off this Greek news over the weekend. Gold, however, has sort of rallied at the open, but is now sort of come back towards that key support band around 1175 once again. Once more, as I was looking at last week, I think a close below, or a series of closes below 1175 would put pressure on that key low at 1163 once again. And it certainly doesn't look as though the safe haven trade has benefited gold all that much on Monday morning. Interestingly enough, similar sort of outlook on silver. So for the rest of the week, we've got a lot of data to watch out for. You've got the pending home sales for the US on Monday. You've then got US consumer confidence on Tuesday, again another key number. Wednesday, we've got all the PMIs across the board, the manufacturing PMIs for China, for Eurozone, for UK, and the US ISM manufacturing data as well. That ISM manufacturing data will be one of the key indicators to look for, because it's started to pull higher again, and if you see that as a continuation of that trend, the Fed will be certainly taking notice of that. On Thursday, we've got non-farm payrolls a day early, because we've got the 4th of July this week, national holiday in the States, and they're going to announce on Thursday the payrolls data. Forecast to come in around 230,000, which is slightly lower than 280 last week, but certainly it would still be another positive number. And if that again beats expectations, then we could see again a strong dollar move. For the average hourly earnings, we've got again, you'd be looking out for a move. The expectation is 0.2% for the month, as always it tends to be, and it'll be interesting to see if it beats that again for the second month in a row. But these are key indicators that the Fed will be looking at. So a lot of US data to drive these markets throughout this week, and I think that it could be a very volatile one with that in mind, and also Greece. So I wish you good luck in your trading, and I'll speak to you next Monday. Thank you.